Everybody, this is Jason Matthews. I want to get on this today because there's so much things are happening in the market, especially yesterday. We saw tons of carnage, tons of carnage, I want to say, in the stock market. So what we wanted to do is educate you guys on what's happening in the stock market and just the economy in the stock market, period, so you can make the best education decision for yourself, your family, your business, and your community. So before I get started, let me go ahead and put my phone on vibrate to go a little bit deeper. So yesterday we saw tons of carnage in the stock market yesterday. And the reason we saw tons of carnage in the stock market yesterday is that inflation numbers were higher than they were expected. It was at 8.3% for the month of April, and which is a little bit lower than we saw in March, which was 8.5% on a month annualized basis. But they were a lot higher than we expected. They thought that we might hit the peak and there's going to be a lot less. So we saw that 8.3%. And what scared the market is this, because that means consumers now are taking especially I would say my lower working class blue collar people are taking a brunt of this inflation, as it costs more for them to go to the grocery store, go to the gas station, and so on and so forth, just to live their basic lives. They are getting hit the most from this. But at the same time, what we're seeing from that is companies are worried that the Federal Reserve might raise interest rates again another half a basis point or 0.5%, which would, if they do that it means that interest rates would go up more to fight inflation. But when you fight inflation more like that, it's going to cost them more to service debt. Let me break this down, the reason why. If interest rates go up, it's going to cost you more to borrow that money, because I can put that same money into a safe asset that's guaranteed by the government or just safe period and get a higher rate return. So with that being said, is companies that have bad cash flows are feeling the brunt of this. And most of the companies that we see that have bad cash flows are what we call our tech companies. A perfect example of that is if you've seen the show We Crash, where WeWorks was saying, hey, we're doing we're growing, but then we look at the numbers, they had horrible cash flow, and then what they said that they were valuable, when they were actually were dropped down drastically. The reason that we're going to continue to see more of that is companies that have bad cash flows are looking at like, oh, snap, we have bad cash flow. And if interest rates go up, we're going to have to pay more on to service our debt. And we're going to have less investors who are willing to give us cheap money. It's going to cost us more to get money. And so right now we're seeing that huge amount. So yesterday we heard about Carvana laying off a huge amount of their workforce yesterday. And we're going to continue to see that. So we're starting to see layoffs in the tech space, which we expect to see. Also, we see that Coinbase came out with a new announcement on their earnings as well. So remember, last year, cryptocurrency was the talk of the town. It was hot, it's sexy, crypto and NFTs. Coinbase, which was an IPO, a publicly owned company that went public as a space where people could buy and trade their cryptos, on their Q1 stock dropped 88% from their IPO when they first initially public offering. And the reason being is, one, in their Q1, they lost $429 million. Most of the money that they make is from transaction fees. Me buying a crypto or me selling crypto, they charge a transaction fee for that. That has dropped down to 35%, which means this: people who work in the crypto market buying and trading, we have a lot less than by 1/3. So that's a very interesting point as well. Right now, also, Bitcoin is down 60% from its peak in November. So if you had $1,000 in Bitcoin in November, now today, and you buy that $1,000, now today it's worth $600 right now. So, I mean, it's down, it'd be worth $400 because it's down 60%. My apologies. So what we're going to see is this: the Feds might want to continue talking about fighting inflation because of interest rates. Now, if you're a borrower, it's going to be harder for you if you're borrowing money, because it's going to cost you more to borrow it. But a lot of consumers are, I think it might be in position for this, based off a lot of consumers, based off the PPP program, the unemployment benefits, and other money that the government gave during COVID, paid off a lot of their credit. So I think consumers are actually going to be in good going to be in a good space for as not serving so much of the debt, but they will see it when they go to the grocery store, food, energy prices, so on and so forth. But tech companies are going to see it. Also, right now, the Dow Jones average right now is down 170 points. So there's still some shock waves from yesterday. Also, when you look at NASDAQ, I keep talking about NASDAQ tech because it was having a huge run. But if we look at it year to date, it's down 27%. So if you had $100,000 on it January 1st, today it is at it is worth $73,000 at $100,000. So we're seeing a lot of that. Now, if you're a saver in retirees, I think this might be a good thing as yields go up, treasury rates go up. We're seeing more people fly over to safe assets, and they're able to put the money in safer assets to get a guarantee to get an income that they need for retirement compared to having their money in riskier assets. But like I said, I'm not sure this carnage is going to be over, but we are seeing very turbulent times due to inflation, as we have not seen inflation like this in 40 years. And then in the 80s, that was the end of inflation, but that was after Volcker raised interest rates drastically. Will we see interest rates raise up drastically again? I don't know. But what I do know is this, is we will have inflation for, it looks like what they're thinking is sometime for the rest of this year that we're going to have inflation. Will inflation go back to normal levels? Because we're always having some type of inflations. We don't know. But we do know there is issues in oil, supply chain issue with China, as China having a huge amount of shutdowns again due to COVID, supposedly. So we're just going through a very turbulent times where, and we're going through a period where we have to be educated and make the right decision for ourselves and our families. Anyways, I'll talk to you everybody later. Hope everybody have a good day.